Risk model is the most versatile and important parameter of holistic order manager. This sets up the default behavior of holistic order manager. It is set up as a text value. It has three parts. Each part separated by a colon character, and the parts are in a specific order. The first part is required. Second and third parts are optional. If you need to define part 3, you must also define part 2 before it. So let's look it very closely. Here you see this colon character and another colon character. So there are three parts, 1, 2, and 3. If part number 1 part number 2 and part number 3. The very first part is, as I told you, must. It is required. If you omit the part 2, then you also have to omit part 3. If you have to define part 3, then you also have to define part 1, followed by part 2, and followed by part 3. Now let's understand each part in detail. In part 1, here you can define the amount of risk used each time you want to open an order in any currency pair allowed in broker's platform. You can define risk as either fixed number of lots like 1.3 lot, or a fixed percentage of equity balance like 1.5% of your equity, or a fixed dollar amount of the equity balance. For example, $150. So in the first part, it has to be in a specific order. Like if you are defining a fixed number of lots as your risk parameter, you have to define how many lots followed by the letter L. If it is a percentage, then you have to define the percentage followed by a percentage character. And if it is fixed dollar amount, you have to define a dollar, a value followed by dollar character. So if you have let's say $10,000 equity balance and you want to risk 1% on every single trade, then whatever is the balance, it will, a holistic order manager will risk exactly 1% of that. So for example, if you have $10,000, 1% is $100. So it will open a trade with a maximum risk of $100. Same way, if you define a fixed dollar amount, it doesn't matter how much your account balance is on every single trade, it will risk $150. It will calculate the lot size accordingly. Same way, if you have a fixed percentage amount, it will calculate the lot size for a trade accordingly. Now the part 2, here you can define if you want holistic order manager to break initial phantom order into sub orders from the very beginning or not. You have to define sub order percentage separated by plus character. If you omit part 3, you must omit part 3 also. Now default is 100% with only one order if you only have part 1. So right now here it is 100% means if I want to risk 1% on my trade, so 1% of $10,000 is $100. I want to open only one trade risking 100% on that trade. If the lot size for that risk of $100 is, let's say, 1.2 lot, it will open a single order with 1.2 lot. But if I want to split it from the very beginning, here instead of 100, I can define something like 50 plus 25 plus 25. What that means is break the initial phantom order into 3 separate orders in the market when the current price reaches your entry price. If initial risk of 1% allows you to open, let's say, 2.5 lot order to buy or sell, it will open the first order with 1.3 lot, which is about 50% of 2.5 lot, and the second order with 0.6, which is about 25% of 2.5 lots, and the last order with 0.6 lot again, which is 25% of 2.5 lots. So if I'm risking 1.3 lot, then this 1.3 lot will be broken into 3 sub trades, each with their unique ticket number but a same magic number, like 0.1.3, so 0.7, 0.7, 0.7 lot plus 0.3 lot plus 0.3 lot. So it will create 3 trades with 3 unique ticket numbers. The very first one with 0.7 lot, the second one with 0.3 lots, and the third trade with 0.3 lots again. The total of this percentage should be equal to 100%. If there is a mistake, if the calculation don't add up to 100, it will give you error message. The part 3 has 2 subparts. Both subparts are separated by a star character. If you look here, this third subpart, there are 2 parts, MAN and 2.0 separated by a star character. First is the initial stop or a trailing stop method code, and the second is the default reward ratio to the initial risk used for order entry. For example, this MAN star 2.0 means default trailing stop method is manual and default reward ratio to initial risk is 2.0. If your order's initial stop is placed at, let's say, 10 pips away from your entry price, the first target for the order will be placed at 2 times the initial risk, which is 20 pips away from entry price. Let's look at it now here. Right now, in this risk model, we want to risk 1% of our balance, account balance. We want to create only one trade with that risk amount, and my default trailing method, if the order turns into a live order, is manual. That means you will manually trail your stop loss, and initial risk reward is 1 to 2 times 2 units. Let's press OK and see each different parameters. Let's say I want to place a buy order above this fractal high. You can press Control key and click. It will bring up order entry controls. Here you will notice that your entry price is 0.95990 and your phantom stop is placed 10 pips away at 0.9589. So this risk from entry price to the phantom stop is 10 pips. So automatically it will put your profit target, your initial profit target 20 pips away from order entry price, which will be 0.96190. Here in the information you will notice that you want to risk 1%. So if your order is entered, is live, and the price falls below and stops you out, you are risking 1% of risk, which is $38.90. Your account balance right now is for this account is $3,890. Here in the initial trailing stop method, the default which you have defined manual will be populated. You can always change it. Your trailing stop method, let's say for example you don't want to trail anything, then press off as your trailing method. You can always change your risk to reward ratio later on, but initially it will put it at 2 times your initial risk. Now let's see if we risk this 10 pips for a 1% risk, the lot size is 0.3 lots. Let's try doing the same thing. If you try to place a fixed lot at the same price, it should keep these values similar, like 14.9 pips risk. The risk amount is 38.90 and 1.0 risk. Let's clear it and change your first parameter to 0.3 lot. So by defining this, you are telling that no matter where your order entry price or your initial risk is, you put fixed number of lots. You open the trade with a fixed number of lots. Let's do it again. Control, click. Our entry price is again 0.95990. Here you will see that it will open your trade with 0.3 lots. Here, because of the changes in bid ask price, you now see that the risk is 15.1 pips, which is about $33, which is little less than 1%. So here, if you move any of these parameters like a order entry price or a risk, your lot size will remain fixed. It will change your risk in the number of pips you lose, the dollar amount, and the percentage. Let's see if I move it further down and increase the risk. Then you notice that the lot size didn't change. My risk has increased. Similarly, my number of pips has increased, but the risk has decreased. If we move it further close, you will know that number of pips will decrease, but because of the larger number of lot size, your risk increases. So some people likes to have a fixed number of lots. They can use this method. Those people who religiously go by fixed number of fixed percentage of risk, they can go by percentage. Or some traders like to have a fixed number of dollar amount. So let's say at 10 pips, we want to risk about $38.90 on each trade. Then we can define here in dollar terms, 38.90 dollars. So on every trade you want to risk about 38.90. We are giving this fixed number to check whether our parameters are working properly or not. If I say OK and try to open the same order again, you will notice that your risk is exactly 10 pips, which is about 1% of your account. 1% of your account is 38.90, so you are risking about $38.90. Now your lot size will decrease 0.2 lots. So Holistic Order Manager will calculate your lot size or your risk amount or stop level according to the defined criteria in the risk model.